Welcome to Financial Focus, brought to you by GulfCoast Financial Services founder and CEO, John Kuykendall. John and his team of financial, legal, and tax professionals have provided North Florida savers and investors sound, comprehensive financial guidance for over 25 years, helping you to achieve important life and planning goals. Be sure to like, subscribe, share, and tune in for more Financial Focus by visiting GulfCoastFinancial.net.
And welcome into the program. This is Financial Focus, brought to you by the best of the best in financial services, as named by the readers of the Lake City Reporter, 7 years and running. The team from GulfCoast Financial Services, founder and CEO, John Kuykendall here, providing the guidance and direction for us. And John, it's an exciting time of year. Everybody's favorite topic, taxes, right around the corner.
Well, unfortunately, taxes are one of the biggest things that we have to face. And we spend very little time on them. Well, we just kind of accept what happens. And so it's really interesting that as we retire, that taxes become more and more a part of our retirement package. And we don't really understand that. It's a great time, but it's also, a time when you're sitting down trying to work up all those receipts and figure out what you can deduct and can't. And some of the things that you did last year, you may have made some mistakes on, and they're going to cost you money this year in taxes.
Well, I think we're going to talk about a couple differences on today's program. We'll talk about taxes as it relates to income and taxes as it relates to investments. We'll talk about taxes as it relates to planning and looking forward versus preparing, a historical look at what we did last year and filling in the boxes correctly. You bring up another important distinction, though, John, with retirees and taxes being handled a little differently. Do you feel like retirees are maybe more keenly aware of taxes than we are as we are working through our career?
Yeah, I think so, Peter. I always, as long as we've been planning, we've always said that taxes would be lower in retirement. And that's not the case. Taxes are actually as higher in retirement than they are while you're working. While you're working, you got that paycheck coming in. And so taxes are taken out of your paycheck and you really don't understand how much you're paying. But when you are retired, then the taxes you pay are coming out of the money you have to live on. And I think retirees are very aware of how much taxes are paid.
We've got a finite amount of money. We've got to make it last as long as we are around and hopefully then some. And so every time that tax hit takes a bite out of that nest egg, it's a little bit of a pain point.
It is. And, the thing is, we've always taught to defer, pay taxes later. And now we're finding that that's not really what we should have been doing. We should have been doing other things to build up some tax-free income so that we would have a better retirement. But unfortunately, for this generation...
Sorry, go ahead.
Well, for this generation that are retired now, there's not much we can do. What we have to do is train the next generation to do it better.
Well, I've been scouring the tax code, John, and I have not found anywhere where it states that we automatically pay lower taxes in retirement. And I know tax rates have come down and earnings have come up. So maybe it wasn't a huge misstep to utilize those tools that taught us and incentivized us to defer and delay paying taxes to this point. But we are definitely seeing a big change and shift in paradigm looking forward for those that are planning ahead.
Well, the thing, Peter, is as we went more to the IRA and you paying your own way versus the defined benefit plan, what happens was that we deferred this huge pile of money. Now we have to, in order to live, we have to pull that money out. The one thing we're finding is that we're not able to live in retirement on less money than we were taking when we were working. It just doesn't work. I mean, inflation and everything, cost of living is keeping us pulling that money out. And as we pull that money out, more and more of our Social Security is taxed, more and more of our Medicare is taxed. There are just rippling effects that affect your whole retirement package.
Now, John, frequently on the program, you talk about the value of and importance of income planning, not just in the confidence that it builds with creating income in retirement, knowing where things are coming from, what the order is, but income planning actually presents us a pretty big opportunity to identify some proactive tax strategies and where we maybe could control our future tax liability.
Well, that's right, Peter. What we look at with income planning is what we're trying to do is we're trying to give you the best income for as long as we can in the most efficient way that we can give it to you. And by doing income planning and tax planning together, we're able to do that. And that's one of the things that we really stress here at GulfCoast Financial is using our tax software and using our retirement planning software, using them together. And then during the year, or anytime that you are going to make a change to the plan, let's review how it's going to affect your taxes.
Now at GulfCoast Financial Services, you actually have a sister company under the same roof, GulfCoast Tax Advantage as well, looking at things proactively from the financial and the tax standpoint simultaneously can really present your clients with a distinct advantage.
Well, that's right, Peter. It can, and we do. We really want to make sure that our clients understand the taxes that they're going to pay. Just example, we had a client come in the other day, and they were going to sell some cows. So we wanted to know how that gain was going to affect their income this year, and so we projected that out.
Well, again, these are the type of things that we need to have some guidance on in order to better control our outcome financially and from a tax standpoint. And if you would like to look over your financial outlook and your financial future throughout retirement and make sure that you are doing things, setting up yourself properly in order to keep as much of your money as possible, minimize those tax implications, generate the income that you need. That's part of the financial strategy session and the financially focused retirement income plan that John and the team will help put together with you. Give a call, 386-755-9018. That's 386-755-9018 for a complimentary conversation with John, with the team, and to discuss your questions and the future challenges that we may face, as well as some potential solutions to those. 386-755-9018. That's 386-755-9018. John, we hear the term tax season. We really don't need to confine the thinking about and the addressing taxes to just one season of the year. It really needs to be an ongoing, evolving thought process and process that we move through.
Well, it needs to be a proactive experience. We need to be proactive in planning our taxes, not reactive. So we don't want to wait until the end of December or next year and then say, okay, how much do I owe? What we want to do is work with you through the year so that we know how much taxes you owe. And we can also predict some ways that we can help you save taxes.
Well, John, we've talked about how there are some gotchas in retirement, some big expenses that we all are going to have to face. And at the top of that list was taxes, and will be taxes, probably one of our largest known expenses in retirement. We've talked about it another way in terms of the gross planning mistake, and a bit of a pun and play on words intended there, because a lot of people have these accounts that they have yet to pay tax on. Those are gross numbers. And when they take some income from them, they sort of forget to factor in the taxation on that income. That's kind of the first whammy, but there's actually some additional implications of withdrawals from tax deferred accounts in retirement that we need to be aware of.
Well, that's right, Peter. We need to make sure that when we're pulling money out of a retirement account, that we're pulling it out in the proper way. The thing is that I like the analogy that what we've done for my generation is we're paying taxes on the harvest. We didn't pay taxes on the seed, but we're paying taxes on the harvest. Which one would you rather pay? Would you rather pay it on the harvest or the seed? I mean, the seed's a lot cheaper because it hadn't grown yet. But why do we want to pay it on the harvest? The thinking's all wrong.
Well, especially while you still have more seeds coming in. It just seems easier to me to pay it out of a paycheck than it does out of the retirement nest
Yeah.
egg after we have stopped earning more seed to go and plant. So, but again, John, there's kind of some double and triple whammies here. Those withdrawals from those tax deferred accounts, they can actually impact our Social Security and our Medicare premiums.
Well, that's right. More of our Social Security is now taxed based upon how much income we make. And then also, which a lot of people don't realize, up to 85% of your Social Security is subject to taxes based upon how much income you make. People think Social Security is tax-free. It's not. And the other thing is that your Medicare premiums are also indexed for how much money you make. So your Part B, the more income you make, the more you're going to pay. The more you pull out of your retirement account, your deferred account, the higher your income, the more you're going to pay. You've got to stay within those brackets to give you the most efficient means possible so that you pay the least number. And we know where that is. We know what it is. We work with everybody to make sure that you stay within those limits. I had a client one time that we went over the individual, how much she could make as an individual, because she pulled money out to buy a small car for her daughter. And, she was like, I don't understand that. It's my money. Why can't I take it out? And I said, well, you can take it out, but your Part B is going to cost you more because you went over the limit. So people don't understand that whole concept.
We want people to be prepared, informed, and educated and not surprised. And that's why the planning process is so important. Sitting down with John, a team of qualified, experienced professionals, looking at your financial situation, your expectations and goals for your financial future, and mapping out that income plan. De facto, also understanding more of your tax situation and tax liability. Now, John, there are some great proactive strategies where we can take greater control over our ultimate lifetime tax liability. And right now, we are really, for many of us, looking at a pretty good window of opportunity to gain that control over our outcome.
Well, that's right, Peter. And if you haven't reached Social Security age or Medicare age, then the Roth conversion is one of the best ways that we can get some of that money out of deferred, put it into a Roth, and have it grow tax-free. That certainly pay the taxes now, and then later as it grows, we don't have to pay taxes again. But now if you're on Social Security, if you're 65 or older, we got to worry about that, because here again, we hit that threshold with the IRMA, on the Medicare. But there are also some things such as, life insurance and other things that we can do that will give you a tax-free income and will help you be able to kind of trigger your income the way we need it. What we need is more than one bucket. We don't need all of our income in the deferred bucket so that every time I pull it out, I got to pay taxes. I've got to have some in a tax-free bucket, and I've got to have some in a tax-deferred and then a tax-preferred bucket.
That diversification of tax status may be as important, equally important as the diversification of asset classes, John. Gives us, again, greater control and flexibility into our future.
I'm finding, Peter, being retired myself and having to live this dream of paying more taxes and actually paying a lot more for my Social Security now and my Medicare, that, we need to be able to do that in order to have the best retirement we can do. We don't need to give the government any more money than they deserve. We want to pay what's fair, but we don't want to pay more. Proactive tax management is what we need to be doing.
Now, John, a couple times on the program, it sounds like you've been a fan of, an advocate for Roth contributions. A lot of people now actually have that opportunity through their workspace plan, through their 401k. There is an option for a Roth 401k. However, I've heard several times the perception that if we choose to make contributions to the Roth, that the company will not match those contributions. Can you maybe clarify that?
Well, the ones that I've seen, that's not true. that that company will match just like it's going into a regular deferred IRA and 401k. So that they'll match it. What we want to do is we want to pay the taxes now, because I guarantee you, we are at the lowest tax brackets in the history of the United States. You're going to see taxes continue to go up and up and up. So if you got a chance to put money into a tax-free bucket where I can grow it, I pay my taxes now, and I can grow it, then that's what you ought to do. And that you ought to be putting all of your money into that bucket.
Because, John, the bottom line is if we choose to defer and delay paying tax in those retirement accounts, we are essentially allowing the IRS to be the managing business partner of that account. They get to set all the rules and can change them at any time. So that's a little less certainty about what our financial future holds.
And Peter, the rules do change. The rules change constantly. We're going to be sunsetting in 2027, these new tax rules. They're going to change again. They're going to change between now and then. So why have a partner who has all the control, who can tell you what you're going to do before you get to vote on it? I mean, it just doesn't make sense. You got to get the IRS out of your retirement plan.
And again, looking at income, a little bit different than investments. John, with our income, generally the IRS sort of sees what we've made along the way, even before we do. They take that bite out of our paycheck and then we bring home the rest. But with the investments, we have some choices, we have options, we have greater control, and we can take steps within the tax code to define our tax outcome.
That's right, Peter. And that's what we should be doing. And if you've got money, if you've got investments, mutual funds that are in a brokerage account that you're paying taxes on each year, we have to be careful of those because those taxes are declared each year. So we need to look at the whole tax picture, everything that you're doing, and maximize it so that you can minimize your taxes.
And there is a big difference between preparing the taxes based on last year's income and then having a forward-looking proactive tax planning approach. John, in the world of taxes, better controlling our tax outcome, where are you seeing some of the best opportunities right now?
Well, the best opportunities are certainly the Roth conversion. We want to make sure we do that if we can before 65. Secondly, we're seeing a lot of emphasis on life insurance. Life insurance has changed a lot. I started selling life insurance 50 years ago, and it was a lot different then than it is today. Today, it is a multiple faceted vehicle that will do a lot of different things for us: long-term care, tax-free income, tax-free death benefit. There's just numerous ways that we need to do that. And so we need to be looking at life insurance. I think that's one of the big tools that you're going to see us using in the future.
Well, taxes are a pain. They're sort of a thorn in all of our side. Paying taxes does mean you made money. I've heard it termed a good problem to have, but I still hear the word problem. And it's a problem, John, that many people want to try to solve and address, especially when taxes are on our mind this time of year. And that's one of the reasons why you offer the opportunity for the complimentary review and strategy session.
That's right, Peter. We will look at your taxes. We will look at your income. We will try to tell you what we think you need to do. We will be proactive in everything that we do. That's what we want to do, is we want to be proactive here to make sure that we give you the best retirement you can have.
Well, if you would like to take advantage of the opportunity for that complimentary review, that retirement planning and tax planning strategy session, pick up the phone and give John Kuykendall and the team from GulfCoast Financial Services a call, 386-755-9018. That's 386-755-9018, 386-755-9018. And John, for current clients, GulfCoast Tax Advantage there can help them prepare their documents and file the returns from last year.
That's right, Peter. We really like to do that because I like to keep them on file. I like to review them during the year. Every time we meet with a client, we bring those taxes out.
Well, if you would like to have that retirement review, have an income plan in writing, map out your income for the future, and get a better handle and understanding on your tax liability and strategies that can help you control it, pick up the phone now. Give a call for that financially focused income plan, 386-755-9018. That's 386-755-9018. John, always a pleasure. We appreciate the time and the perspective that we need to have on how to better control our tax future.
Thank you, Peter. That's what we're here for.
Be sure to like, subscribe, share, and tune in for more financial focus by visiting GulfCoastFinancial.net. The information presented on this program is provided for informational purposes only, without warranty of accuracy, completeness, or suitability for a particular purpose. This program is not intended to be and does not constitute financial, investment, legal, or tax advice. This information is general in nature and not specific enough to be construed as advice. You should not make any decision based on the information presented on this program without independent consultation with an appropriately licensed professional or competent advisor. Investment in securities or the market involves a potential risk for loss of principal. Trading, therefore, may not be suitable for all listeners. Annuity guarantees are based solely on the financial strength and claims paying ability of the issuing company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the product's features and costs. Early withdrawals may subject the owner to penalties, fees, or taxes. John Kuykendall is registered with and securities are offered through Kovac Securities Inc., member FINRA SIPC, found online at www.kovacsecurities.com. Advisory services are offered through Gulf Coast Financial Services Inc., a registered investment advisor in Florida. Gulf Coast Financial Services Inc. is not affiliated with Kovac Securities Inc. or Kovac Advisors Inc. Past performance is not indicative of future results. All investing involves risk. Investment decisions should be based on your own goals, time horizon, and tolerance for risk. Due to various factors including changing market conditions and/or applicable laws, the content may no longer be reflective of current opinions or positions.